Video, we'll be going over IRS Form 8275, Disclosure Statement. So the purpose of this form is that taxpayers and tax return preparers will use this form to disclose items or positions that are not otherwise adequately disclosed on a tax return. The exception for this is if you're taking an item or disclosing an item or a position contrary to Treasury regulations. In that case, you'll want to use IRS Form 8275-R Regulation Disclosure Statement. So the purpose of this tax form is to provide or to ensure that the IRS has enough information from your tax return to avoid accuracy-related penalties, either due to disregard of tax rules, due to a substantial understatement of income tax for non-tax shelter items, or also related to either economic substance penalty, tax preparer penalties for tax understatements due to unreasonable positions. So this form is pretty useful in very specific situations where you would otherwise need to make sure that your position is disclosed to give the IRS complete information about your tax position and to avoid any penalties. So there are a few parts to this tax form. There's 4 parts. As you can see, there is Part 1, general information. Part 2, detailed explanation. Part 3, if you happen to be a partner, shareholder, beneficiary, or residual interest holder in a pass-through entity, you would complete information about the pass-through entity. And then Part 4 is an additional narrative field titled explanations, basically where you can continue from parts 1 or 2 as applicable. So this tax form is fairly straightforward. We will go through it, but first there are a couple of key concepts that we should cover before we get into this form. So regardless of what you put on a disclosure statement, filing IRS Form 8275 with your tax return will not help you avoid the portion of accuracy-related penalties attributable to certain types of misconduct. So negligence, intentional disregard of regulations, a substantial understatement of income tax on a tax shelter item, a substantial or gross valuation misstatement, substantial overstatement of pension liabilities, substantial estate or gift tax valuation understatements, any claim of tax benefits from a transaction lacking economic substance or failing to meet similar requirements under the rule of law, any otherwise undisclosed foreign financial asset understatement, or inconsistent estate basis. In other words, if you're intentionally disregarding tax rules, you can't use IRS Form 8275 to cover it up. And we should probably kind of take a moment to discuss the various penalties that are at stake. So pretty much we're talking about the accuracy related penalty, which is 20% of any portion of a tax underpayment due to negligence, disregard of rules or regulations, pretty much everything I just stated. So substantial understatement of income tax, substantial valuation misstatement, substantial overstatement of pension obligations, substantial estate or gift tax, valuation understatements, any tax benefits from a transaction lacking economic substance, undisclosed foreign financial asset understatements, or inconsistent estate basis. Now this tax penalty is 40% of any underpayment attributable to one or more gross valuation statements, either a substantial valuation misstatement under Chapter 1, overstatement of pension liabilities, or substantial estate or gift tax valuation understatement. If you're able to show reasonable cause, then you won't receive an accuracy-related penalty. And so in addition to the accuracy-related penalty, there's also a substantial underpayment penalty, which is the excess of the amount of tax required to be shown on the tax return for the given year over the amount of tax that was actually imposed on the tax return for the tax year, minus any rebates. So the substantial understatement of income tax happens if the understatement for any tax year is either exceeds the greater of either 10% of the required tax or $5,000. For a corporation, the understatement is considered to be substantial if it exceeds the lesser of 10% of the tax required or $10 million. And finally, there are tax return preparer penalties if a preparer files a return or a claim for refund in a situation where they take a position where they knew or reasonably should have known would understate any part of the tax liability if there was no substantial authority for the position, if it was a known tax shelter or a reportable transaction, or if the position disclosed is not a tax shelter, but there was no reasonable basis for the position. So that tax preparer penalty is the greater of either $1,000 or 50% of their income that was derived by the return preparer. So now that we have those specific kind of accuracy related penalties addressed, this is reasonable use of this tax form is to help a taxpayer further explain a situation. And in most situations, you either do not need to file IRS Form 8275. For example, the IRS, in various revenue procedures has declared charitable contributions to be acceptable in very specific circumstances as long as everything was adequately declared on Schedule A, as long as there is substantial documentation in place, and as long as the taxpayer meets certain due diligence requirements. So that would be an example of a situation where you don't need to file Form 8275 on top of providing reasonable information that supports your reasonable basis on a tax position. So we'll go ahead and we'll enter this. We're not going to get into specific detailed advice. To be honest, taking positions on a disclosure statement starts to border on the practice of tax law. So we're going to stick to the basic script of this as outlined in the form instructions. So for our hero John Doe, we'll assume that he's an S corporation shareholder in Doe Enterprises. So he's going to complete this. However, he's not tying this to an information return for a foreign entity. If he were, then you would need to put the name of the foreign entity, the employer identification number, and then if you have a reference ID number somewhere else in your tax return specifically for that foreign entity, enter the same reference ID number in this field right here. But you can see above part 1, we went ahead and filled in his information and his identifying number, which looked like an employer identification number. It should look like a social security number. So we're going to put placeholders here. So you would put the revenue ruling or the revenue procedure that you're citing, and then in column B, you're going to identify something specific by name. It could be an income item. It could be a base, calculating basis for a capital asset, whatever the case may be. In the form instructions, it actually provides an example of entertainment expenses. So let's imagine a catering company. And then in column C, you would enter detailed description of the item. So theater tickets, catering expenses, banquet hall rental. And so let's imagine that this is on Mr. Doe's 1120S. And we'll just put a line number in here. I'll put X as the placeholder, but you would actually use the line number. And then we'll just say that this is $1,000 amount, right? So, your mileage may vary, but specifically, you can enter up to 6 different types of positions. A couple of things previously mentioned, if you're disclosing a position based on a foreign entity, you can use Form 8275. If you have to reference more than one foreign entity, then you need to complete a unique Form 8275 for each foreign entity. And as we get into the pass-through entity information in Part 3, you'll have to do the same thing for each unique pass-through entity. So in Part 2, you're simply writing a narrative. Should be a description of relevant facts based on that would affect the tax treatment of the item. Yeah. So whatever the verbiage is, I mean, this again, the example in this is purposefully vague, so as we're not creating tax advice out of nowhere. But if you do have a position that you're taking, you would use Part 2 to provide that detailed explanation. In Part 3, we're going to write or give the IRS some information about Doe Enterprises. And then identifying number, and then we'll just enter as if they conduct business based on a calendar year, tax year. So this would be for the 2022 tax year. And then, so if you filed it at an IRS service center, you would enter the name of the service center that was filed. If you filed it electronically using e-file, you would simply write e-file in line 4. And then in Part 4, you have the entire page to continue your narrative, to provide that description. So your disclosure statement must include a description of the relevant facts that affect the tax treatment of this item. And to satisfy this requirement, you must include information that can reasonably be expected to inform the IRS of the identity of the item, the amount, and the nature of the controversy or the potential controversy that would surround that item. So this could be a description of legal issues presented by the facts. Maybe there's a dispute over ownership of an asset. You would use this to provide documentation that this asset is in fact belongs to Doe Enterprises as opposed to someone else that may have a legal claim or a pseudo legal claim to that asset. So you would use this to complete that explanation. And again, you would want to err on the side of over documentation to make sure that the IRS, if they disagree with your position, at least they understand that there's a reasonable cause. Still disallow the position, but maybe they choose not to impose a penalty on top of it for substantial understatement of assets or something like that, or some sort of accuracy related penalty. So that's all we have for this article, that's all we have for this video. We break down some of this a little bit more in our article to include some background about filing the form, accuracy related penalties, so on and so forth. If you're interested in reading more, you can check out our article on teachmepersonalfinance.com. Type in IRS form 8275 in the search bar, and you should see the article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. As always, if you have any questions or comments, please post them in the show notes or the comments section. Thank you very much and have a great day.